Monday, March 6th, market analysis. Stan Ehrlich, good morning. We start out with stock market indexes always, and the S&P Spider SPY is my favorite. On the left is the 1-minute chart and this morning's activity so far, with a little bit of last Friday at the far left. We did gap up a little bit this morning. On the right is the daily data chart covering most of 2022 bear market. And of course, October 13th, I told you October lows are coming in advance. 2 months in advance, I started talking about it. We had a fantastic bullish engulfing ER buy signal, automated buy signal at the bottom of the bear market and what I believe to be the beginning of the bull market of 2023. And I've said that since basically January. Maybe even a little earlier than that, but whatever. We've got the third day up now. We had a bullish engulfing on the daily data on Thursday, which was a new high close for the previous 3 days, 4 days, looking real good. I said we had a bullish engulfing. We almost had an oversold condition. We came so close to getting a green bullish official buy signal with the ER trading system, but we didn't. And it's black or white. It's not woulda, coulda, shoulda, or maybe, or whatever. So we missed the official signal, but I expected it, the market to do what it has been doing, including today. Now, Friday, we had the great follow through to the upside, opened a little higher, dipped a little, closed the gap, turned right around, and ran right up. It closed on a very firm note. Today, we opened a little higher, came down, closed a small opening gap, turned around, and almost started to close a gap from a move down on February 17th. It stopped just below the gap. Let's go look at the 1-minute chart on the other workspace. And you can see, well, I don't have it on this one. I thought I did. Just a moment. Oh, I see what I'm doing. Sorry about that. Here we go. So on the 1-minute chart, to recoup, cover again, last week, tested a support line, was way below the neckline. I hated that at the time, but it closed higher on Thursday with that bullish engulfing above the neckline, above the 200-day moving average, the Dow Theorist moving average, and above the long-term previous bear trend line, now a support line under the market. All three of them survived, again, with a bullish signal. So we've got the follow through, and there was a gap on February 17th to the downside. My little red rectangle here details where the gap is. So we came right up to the bottom of it and stopped so far, and are pulling back. Now, I don't think this is anything dangerous. I'm still liking what I'm seeing. Seems pretty normal. Take a look at the daily RSI. It's gotten up to about 65, which is not too high. It's getting up there a little, but I like to see at least 70 to claim that it's getting close to my 75 overbought level. I learned RSI from Wilder himself back in the 70s and 80s, and I've adjusted it, customized it to my personal preferences, and I like this indicator at the bottom, which is a customized relative strength index. So we call it the ER RSI. Now, enough said about that. Maybe we will dip down a little bit more, maybe not, but I do expect this market to hang in there and start to make new highs this week, if not today, and close that gap. Now, if it does it real fast, we're going to get a little overbought on the very short-term charts, and there could be another pullback. Wouldn't be surprised. But it doesn't have to do that, and it may not. It may just go up there, close the gap, and keep on going straight up. Now, DIA, daily data, has that major long-term bullish formation starting in June, just like the spider, and the lows in October, like every other index I can think of. And we did get oversold last Thursday, actually Wednesday, and below 25. So that officially is oversold territory for me and prime territory for bullish engulfing. And then I would have an ER bullish buy signal, which didn't happen because we don't have a key reversal bullish engulfing within the allotted time after being oversold. So it did bottom out because of oversold conditions and generally speaking in a support area. And now the third day up today, we're a little bit higher than it opened, a little below the middle of the range. I wouldn't be surprised if it started heading up in general to the close. Maybe a new high or maybe not. But I don't think it's going to break down particularly badly at this point. The QQQs are a very similar situation. But this is the first time I have seen two gaps in a row on daily data charts, especially in a stock market index, in many years. Frankly, I can't remember the occasion. It's very rare to see two gaps either down or up in a row. We have it this morning. Now, remember, gaps are like a black hole in space. They tend to suck the price action back into the gap. So I'm not going to be surprised if at least today's up gap is closed soon. The next day, 2, 3 this week. But I don't think it's stopping the bull move. We did get up to resistance. We punched away at it and got above it a little bit and then started to pull back. We are not too far away from new highs for a very significant amount of time for the QQQs. They started their bull market breaking out of the head and shoulder bottom first. There's a complete pattern, and my RSI is probably a little too big for me even. Slide that down. So we're way above the previous bear trend line. The Qs basically from a technical standpoint are doing the best, strongest, quickest, best rallies, percentage, blah, blah. So I like what I see. I'm bullish on the indexes. No offense or buts about it. Let's go to futures. All right. We had 3 bearish engulfings within a couple of week time frame on crude way back in June of 22, but they worked unbelievably good. Lately, we had one new sell signal that's worked okay, nothing particularly spectacular. And I would have gotten stopped out by now, of course, on this particular rally here, which was in early February. So that was a profitable past tense trade. Will it have residual effects and start to make new lows for the whole trend? I do think so. And I do think so maybe this week. I'm looking for weakness to start to show its head. We're at resistance. We've had a rally. We got up to about 70, almost 69 on the RSI. So, we're in prime territory to start down. Next chart is heating oil. Remember, I'm warning you, if we break these 2 green dashed lines, especially the lower one, it's going to be new lows for damn near a year, and that is super bearish. This market has formed 3 highs at approximately the same level. That's about 3.5-ish. 3.4, 3.5, 3.6. Okay. Major historical resistance. Every time it got into that approximate price range, we have a bearish engulfing ER sell signal that worked like crazy back on June 17th. We have another one, in fact, 2 of them within 4 days, but this one's the top of the market on November 8th, almost the top, excuse me, not exactly the high day like the one before. And just recently, January 27th, 23, January 24th of this year, on the top of the rally, just like I've developed this system to show me the reversals at the turning points to the day frequently. So I think we're going to break down below these support levels and see a long-term bear market start soon, or continue, if you will. Right now, it's in its top building process, I believe. Heating oil. Now, the next one is platinum, and all 3 precious metals have bullish engulfings only about a week ago. At the bottom of the move, platinum had a green bullish engulfing, and the date was February 27th. We have had a new high for the move on Friday. Today's high on the opening was very close to making a new high. Currently, we're down just a little bit and we are a little higher in the middle of the range so far. Every market deserves a little rest, and that's what we're getting today. I think we're going to see new highs for the move up this week. That could be pretty important here. Remember, we've already gotten up to some resistance levels, and that would be, 980, low 80s, 9 in the low 980s, not 980, excuse me, 80, 1, 2, 3, 4 area. Not overbought, not even close. So there's room on the upside. Next chart, and that was platinum, is going to be gold. At the bottom of the market, we got a buy signal on gold last week, early last week. What was that? Tuesday last week. So far, almost every day has had a higher high. Today, not quite. Very, very close. Friday, it was a higher high. Thursday, no. Wednesday, a day after the buy signal, yes. And notice that the low is right around that green dot, which is my ER3 entry point. Now remember, ER3 does want a little retracement in order to get into the trade, lowering your dollar loss if you have a losing trade and increasing your profit potential. ER1, anytime you see a green daily bar or red, we are long or short at the moment that turns green or red, which is dynamic, real time during the day, that turns colors. Next chart is silver. And at the bottom of the move in silver, last Tuesday, same thing. In fact, on Friday, or excuse me, that would be Thursday, we plainly came down a little bit below the yellow, green dot, which is the entry for ER3. So it bought it, closed with a very small profit first day. We have a better profit on the second day, which is Friday, and this morning we have a little bit less profit, no signals to sell out, no lower lows, no problem at the moment. I think we're going to see new highs this week easily in silver. Next chart. E-mini is a stock market indexes, yes, indeed, and it is also a futures contract. So it's in the futures group as well. And sure enough, look what we've got. Those of you who like to trade any form of the E-mini, the micro, the super micro, the micro, or whatever, this signal is there. So if you're using the ER signals technique, you would have had a buy signal on Thursday, nice profit on Friday, and ER3 would have gotten in today. The profit's even better, and the market's holding fairly well at the moment. Now, next chart. Natural gas. We bought the bottom of the break on natural gas only a week and a half ago. Friday was a very big up strong day, a little too strong, almost 75 on the RSI. So no surprise, we're having a bit of a dip. It might be a little larger than I would have expected, but I don't see anything wrong with it. In fact, that might be a very good buying opportunity. I don't think the risk is super high here. Next chart. 10-year notes. Interest rate futures are extremely important these days to the overall market. They were around unchanged after having a higher high. As this chart goes up, rates go down in a very generalized sense, in a very fine-tuned sense. So because they are now unchanged, maybe that's the underlying reason why the indexes have given away some of their earlier strength this morning, but they're still up reasonably well. Not great. I think bonds are going to fiddle a little and rally more. So I am friendly, looking for more base building activity in interest rate futures overall. Like to close up above that green dash line, which is a little support and resistance line. May happen today. 10-year notes coming up. Oh, sorry, this is 10-year notes, bonds coming up. The bond chart, US is the symbol, and up we go. But I didn't get a buy signal at the bottom here. I did get a false buy signal a few days earlier. Didn't work, but these buy and sell signals sometimes cluster 2, 3, even 4 within about a month or less. I don't know that I'm going to get another buy signal, but I might. I'd love to, but we're already rallying pretty decently at today's high and have just simply given away the strength, and we're around unchanged to a tiny bit lower momentarily. So not particularly concerned yet. I do think the market's going to hold around here and start to make new highs, higher than today's highs. Next, Cotton, we had a buy signal. We got 2 chances to get in on the next day and the day after. Looking good. This is going to be, it appears, the second highest close since the buy signal. And I'm expecting to see new highs in the next day or 2 or 3. Next chart, wheat, oversold. And the last week and a half, oversold. No place to be going short. I know it's tempting as heck because it's trending down and the trend is your friend, but not when it's oversold. Look for a rally, probably up to 711, maybe even to high 20s or even low 30s in the next several days, I think. Now, overbought and oversold conditions can last, and that's very frustrating, a week or 2 or 3 and even longer, which is fairly rare. But here it is over a week, and I wouldn't go short here. I did get a sell signal. It's been working great. This is a new low for the trend since the sell signal. Nothing violated after that sell signal. Just unfortunately, it wasn't at the high of the whole damn move. It could have been if that date of February 14th was a bearish engulfing. Then it would have been a red ER sell signal. Next chart, live cattle. Okay, we had a sell signal. It dropped off very nicely the next day, which was Wednesday of last week. So you had plenty of opportunity in 24 hours to have a profitable trade and do something with that. Unfortunately, if you stayed with the trade, it came back up and almost got stopped out on Friday, and we're out officially because we hit the yellow dot. Now, that's only if you don't move your stop quickly. My automated trading system does move the trailing protective stop, oftentimes called a stop loss order, quickly. So this probably was a profitable trade or a lot less of a loss than it appears at the moment. Next chart, and I think I'm going to leave you with corn. Remember, we have a long-term downside breakout last week. But guess what? It got oversold in the process. Not unusual. We have had a couple of days up, a little bit of a bounce close to resistance or touching, but not necessarily the top of a rally so far. Inside trading range today so far, slightly lower current quotes. Maybe we're going to get a little bit more of a rally, but this probably this week is going to make a new low for the trend. I expect it to be below 620 sometime this week. Sooner the better. Rally or no rally in the interim. Next chart, and I think I'm going to leave you with that corn chart. Not much to say on coffee. I'm going to touch on very quickly forex symbols. Euro dollar, 2 buy signals. One of them on the bottom exactly. That's why I built this trading system. February 27th, 2 days later, another bullish green ER buy signal. Today, new highs since either one of the buy signals, and a new high close seems likely. I expect the euro dollar to probably move up to at least 108 very soon and maybe challenge the high for the trend here. The trend, and I'll point out, yep, I got the bottom of the whole damn bear market to the exact day. I'll squish here for a bit and show you the, oops, okay, let's just load more data. Let's go with 3 years. Good. Well, there's your downward slanting channel and most of the bear market. And sure enough, there's our bullish signal smack at the bottom, similar to October 13th in many respects in the stock market indexes. But this is September 28th for the euro dollar at 95 cents. We are now at 106, almost 107, and we've been to 110 already. The trend now seems to be up, and we've gotten more buy signals. Buy signals in an uptrend are a little bit more reliable, you would expect, and that's been my experience. So I like what I see. I'm looking for higher levels very soon, again, in the euro dollar. If you're going to get a buy in euro, let's see if we get a sell in the dollar index. And yes, we did last week. Not exactly working the way I would expect it. Next day, it stopped us out of the position. You probably had a small loss on this particular signal. Now it's starting to work. Now, do you get back in again? Well, the system says don't do that. You missed it. You had a losing trade. Wait for the next signal. If you're going to change your own rules here, I don't think it's necessarily a bad idea as long as you have a controlled protective stop, meaning don't risk too much, period. That's what neophyte, beginning, not very experienced traders do all the time. You like what you see, you get into a trade, you don't think about where you're going to get out, how much you're risking until something starts to go wrong, which may very well be a little bit too late. So I see we're dropping off a little on the spider. I'm going to leave you with this information, except I want to touch on sectors super quick here. Buy signal on XME, doing okay. VNQ, buy signal a couple days ago, new high since that buy signal, which is so far the low of the break and the beginning of a rally. I think we're going to see more. OIH, buy signal almost on the low day, certainly very close, a week and a half ago, and almost a new high for the move up. Not overbought, looking good. I think it's going to go further. XLB, buy signal smack dab at the bottom of the bear move, and two more buy signals, the clustering effect, and we are doing okay today. It's a down day. We did get overbought, so we're not surprised to see it dip back down a little bit. XLV, again, a buy signal at the bottom of the break and oversold conditions and a new high for the rally so far. I'll leave you with that good one. You guys have a great trading day. Thank you, Stan Ehrlich, and I'll talk to you tomorrow.